Hello friends, we are at an interesting crossroad in financial markets today. The year 2022 was impacted by a series of events. Inflation, high interest rates, high corporate valuations, geopolitical uncertainties, headwinds in China, and global recessionary fears, all of which have led to stricter financial conditions and weakened economic activity across the world. India has remained relatively insulated from these effects. The Indian market remained buoyant through calendar year 22, successfully navigating this turmoil. Nifty posted a 7th consecutive year of positive returns, the longest run of positive returns in the past 32 years. The previous longest run lasted for 6 years, from calendar year 02 to calendar year 07. So, what is the expectation for the year 2023? As of now, central bankers are on course to over-tighten policy as they seek to tame inflation. Compared to other nations, including the advanced economies, India is relatively better prepared to handle the external shocks that could be created by tightening of monetary policy. As compared to previous periods of hawkish policy stance, this time around, the inflation differential is in India's favor. Thanks to this, policymakers in India may not follow the Fed completely. India has been a fast-growing economy, even during the difficult times of the pandemic, underpinned by structural reforms, which should serve us well ahead in terms of volatility. In short, India continues to be a better story than the rest of the world. The predictability and the certainty of economic expansion for India is relatively higher when compared to the rest of the world. Our various partners have highlighted the need for an investment solution to steer their clients' portfolio from volatility, and which can provide reasonable growth and capital appreciation over the long term. At ITI Mutual Fund, we have identified the need and ideated an offering called ITI FlexiCap Fund. The ITI FlexiCap Fund is a diversified equity fund that seeks to invest across market caps, from large cap to mid cap to small cap companies, which shall help investors navigate this volatility better. The fund offers flexibility to the fund manager to optimize the portfolio across market caps. It aims to capture the steadiness of large cap companies and growth potential of mid and small cap companies. It helps in mitigating risk pertaining to investing in any single sector or market cap. The fund has no specific bias towards any sector or market caps and is agile to shift gears based on prevailing market conditions. The fund follows top-down sector approach supplemented by good bottom-up stock picking and tactical allocation across market caps. So, what are the key attributes of stock selection strategy for the fund? Companies with financial strength, management pedigree, promising growth prospects, and strong brands. The key attributes of sector selection strategy: emerging businesses, valuations, and margin of safety. The key attributes of market cap selection strategy are global and domestic interest rate outlook, relative valuations, and the liquidity scenario outlook. And lastly, for portfolio construction and emerging themes, with India being poised among all other economies, the theme of domestic cyclicals will be a beneficiary, with sectors such as chemicals, auto, consumer durables looking promising in coming years. The NFO opens from 27 Jan 2023 and closes on 10th Feb 2023. It is our constant endeavor at ITI Mutual Fund to provide investment solutions that help provide positive experience to our investors in their wealth creation journey. So don't lose out on this opportunity to invest in ITI FlexiCap Fund. It's time to bring flexibility that can mold your portfolio with ITI FlexiCap Fund. I look forward to your support. Thank you.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully